Welcome, Curious K podcast listeners. It's your favorite host, Kolakbo, back with another amazing episode to satisfy your curiosity. Today, we have a very special guest, the one and only Maimoona Mohammed, who is not just a woman of many talents, but a true rock star in the world of finance and blockchain. She's as a venture partner at Ectagon Finance, Greyhouse Venture Fund, Mindrug Capital, and the founder and CEO of FinLec, which she's going to tell us about in the course of this episode. Maimoona has unlocked new financial opportunities and taken the world of blockchain by storm, as she's also the Web3 partner at 3X Capital. But that's not all, folks. Today, we are taking a deep dive into the fascinating world of decentralized finance, DeFi, stablecoins, and central bank digital currency, CBDCs, all as part of our ongoing Web3 series. And we've covered some incredible topics in the previous episode, from Web3 applications and decentralized autonomous organization DAOs to Web3 games and even the investment perspective. And now we have the honor of learning from Maimoona's wealth of knowledge and experience in the blockchain space. So get ready, because this is going to be an episode you don't want to miss. Welcome to the show, Maimoona. It's an honor to have you on the Curious K podcast.
Thanks for having me, and great to be here.
Absolutely. You have a very fascinating background based on the things you've done, Maimoona. So I'll just like you to walk us through your background into technology and how things have evolved for you over the years.
Yeah, sure, absolutely. I started my career as a lawyer. I sort of spent the first half of my career essentially working with port operators and ship brokers on buying and selling assets in the maritime industry. So everything from oil tankers to cargo vessels to yachts. It's obviously a massive industry and really interesting work, but I guess unlike anything in startups, it's quite discreet and under the radar, because it's usually one government buying an oil tanker from the other for their navy. I then sort of transitioned into startups, building my first company, which was actually a bootstrap fintech focused on helping millennials in the Middle East to make the smart financial decisions. And the motivation behind that was just the lack of access to information in the market at the time. Scaled that to about sort of 30,000 users on the platform, before then kind of moving into my first venture-backed startup, which was an open banking-enabled credit score for thin-file consumers, again in emerging markets, to be able to build and qualify for credit. The space of credit infrastructure, in the Middle East and across, emerging markets, in fact, is quite premature, and would love to kind of get into that when we're discussing the DeFi aspects of it as well. But that was one of the motivations for us doing what we did, around building an alternative credit score using the customer's recurring transactional data. I exited from that first quarter of last year, and in the venture capital space now as venture partner for a number of emerging market funds, predominantly deploying capital at pre-seed and seed, around average check sizes of 250,000 and more, in both kind of fintech and Web3, both for Africa and the Asia Pacific market.
Absolutely. I mean, that's really impressive, Maimoona. And I mean, I was able to connect when you talked about open banking, because recently in Nigeria, the CBN recently issued a guideline for open banking, and that is actually set to transform a lot when it comes to financial services in Nigeria. And I mean, looking at the growth of VCs on the continent in Africa, most of this investment are going into fintech. And the fact that this open banking guideline is formally issued by the Central Bank of Nigeria, I mean, there is expected to be an amazing growth. So I can understand you plugging into that and building that amazing company. And congratulations on your exit last year. I have to mention that.
Yeah, thank you.
All right. Yeah. So let's go into it, right? So can you tell us what is DeFi, and how it is fundamentally different from traditional finance?
Sure. The fastest way to understand DeFi as a mechanism is maybe to take a step back and sort of think about why there's been a need for it to come around, right? And
Mm,
for that is just that traditional financial services are a nightmare. And there has been over the course of, since we sort of started transacting with money as a commodity, um, there have been so many intermediaries placed in the process that people who actually need access to financial services are getting further and further away from it. I mean, a great example of that is lending and how banks look at what makes a credit-worthy customer. The process of obtaining, a standard loan from an emerging market bank for someone who, let's say doesn't necessarily fit the obvious criteria that the bank has. So they're a freelancer, self-employed, they're employed with a company that is basically based in a different market and they're a remote worker, is so complicated that
mm,
most people are sort of sick and tired of, just the way things have been operating. And so what DeFi really does is eliminate the need for a third party intermediary to facilitate any of this, right? Another major advantage, at least for now, when it comes to DeFi is given that the market is fairly nascent, and things are still developing, regulation is quite a gray area. So from a fintech or from an operator's perspective, you have massive moat in terms of being able to get to market faster. You don't have to spend the traditional 9 to 15 months that any fintech would ordinarily do when it comes to obtaining a license or going through all of the regulatory examinations. If you're building in things like DeFi infrastructure, for instance, which at the moment is not regulated as an industry in many parts
mm.
of the world. So yeah, I mean, it really is kind of an alternative or almost like the next logical evolution of traditional finances, which focuses on just getting the service in the hands of the customer, and decentralizing the actual decision-making process by sort of eliminating any middlemen.
Absolutely. I think, I mean, talking about the nightmare when it comes to traditional, finance cannot be talked about too many times. And the importance of alternative credit score, which you mentioned earlier, I think it's also uh, important, right? I mean, because if you look at emerging markets, maybe like Nigeria, for example, I mean, the percentage of people unbanked, it's still very high. So, I mean, the fact that this is really going to be decentralized and eliminating third party, not necessarily having, for example, interest rate, decided by the government. Because you also talked about loans, for example. So I would just like you to talk slightly more about it. Does that mean that if third parties are eliminated, because you also mentioned it's not regulated mostly in most part of the world, does that mean people can make decisions once it comes to lending?
The way lending and DeFi at the moment works is, and there's quite a few different models being explored, but the intention is to be able to kind of loan to the end customer as quickly as possible and make the facility available to them without kind of the hassle of visiting a branch, completing paperwork, doing all of the unnecessary formalities that I guess current customers are doing. A good example of this would be sort of NFT flash loans, right? There are mechanisms to police what the customer is doing. So, it's not like you can just take someone's money and I guess disappear and never sort of repay. And all of that is usually governed by either an algorithm or a smart contract to actually allow the right sort of decision making to take place. But the importance of it is, if you're thinking strictly in practical terms, it gets people who need access to money as working capital in really quick ways. So
Hmm.
let's sort of take an example, right? If you're an art dealer, you are either a creator, you're an artist, you sell your pieces to museums around the world or exhibitions, or you're a collector and your job is to basically syndicate art from around the world. Typical sort of banks at the moment, so JP Morgan, Bank of America, they only give you a minimum loan of, or their minimum ticket size is 5 million. And that's about 50% of the appraised value of the art. That basically means you need to have an art piece worth at least 10 million in order for you to qualify for a loan. And you as an artist would need a loan for a lot of different reasons, right? To finance an auction acquisition loan, to be able to meet working capital needs, whatever it might be. DeFi eliminates all of that, having to kind of make sure your art is worth a minimum value, going through the hassle of dealing with traditional banks. You're just given, a security, or you're just being able to access a facility off the back of kind of wanting your art piece and being able to draw down from it. There's obviously a number of kind of mechanisms for this. So there's obviously the traditional peer-to-peer lending, but what's now coming up as an interesting lending model is peer-to-protocol lending, where instead of borrowing from a specific lender, you borrow from a protocol or a pool of aggregated capital. And in the event of default, essentially the asset goes back to the protocol instead of going back to a lender. So again, kind of shows how permissionless, you can be when you're trying to develop and facilitate lending through that way.
Great. So stablecoins have gained a lot of popularity in recent years. But how do they work exactly?
So stablecoins came about as a alternative to Bitcoin's volatility. That's basically, in a nutshell, what happened, right? In the last sort of 7 years, the price of Bitcoin has fluctuated to such a great extent that to hedge against it alone as a commodity became incredibly risky for a number of reasons. And so stablecoins are basically an alternative asset class, right? They're almost like an alternative digital currency that's pegged against a more safer commodity. So in some cases, there's stablecoin pegged against fiat currencies. In other cases, there's stablecoins pegged against, an alternative kind of more safer instrument that allows you to then be able to kind of utilize that currency and kind of create this money market where people can rely on the currency. In kind of recent years, it's become an excellent alternative, particularly in Africa, for a number of governments who are now looking to adopt stablecoins as their primary route of transacting. And one of the advantages of course, adopting stablecoins over fiat, and then maybe, enabling use cases off of that, for instance, remittances, is that you're avoiding the traditional banking hassle of transfer fees and remittance fees, which of course, for the diaspora community in Africa is a massive concern.
What are some of the key challenges facing DeFi adoption in Africa and other emerging markets?
The challenges with DeFi are quite consistent with the challenges for any Web3 vertical, right? The first challenge is access, and access can be broken down into education and awareness. So I was looking at the statistics the other day and realized, the crypto bull market, which happened in 2020, 21, particularly for the NFT industry, was driven by 1 million active wallets only, right? That amount of volume and that amount of tradability and this ecosystem of use cases that have come around have been driven by just 1 million people. And if you compare that, to the population of the majority of emerging market countries, that means you haven't even reached 1% of the audience. So I think lack of access is sort of the initial barrier. And as I mentioned, that's a twofold challenge. There's the education, there's the awareness, but then also tools around how that can work on a local level. I think particularly for emerging markets, there's going to be a massive need for hyper-local alternatives, right? I look at it exactly as the way fintech came about. So one digital bank in the world or one digital bank globally can't solve banking penetration as an issue for the entire world. And that's why you need 1 million digital banks around the world in the smallest and largest parts of the world to actually be able to onboard customers and really look at each kind of specific geography in a very hyper-local manner. So I think that's definitely going to be the way for DeFi to move ahead. The other is going to be, I think having some sort of a regulatory framework um, eventually to be able to understand whether or not this is going to be a regulated solution, is going to be something that will really help kind of propel it. Because obviously, from a customer's perspective, knowing that your funds are protected, knowing that what you're dealing with is a safe solution will attract you to work with it a lot more.
Absolutely interesting. I was talking with a startup founder that is building a platform called EduBlock, and all it's trying to is just to drive education in the blockchain space. And I think it's really critical for growth. I think that's fundamental. Education, it's critical. And the regulatory part you mentioned is, I think the regulators need to start thinking about this technology in a way that it can easily be adopted. So, as we know, there are financial infrastructure issues in Africa, lack of access to banking services, and high fees for cross-border payments. So, how can DeFi and stablecoin help address some of these issues?
So the primary advantages that DeFi and stablecoin have when it comes to fixing some of the issues around speed, inefficiencies in kind of decision making, and then also just lack of access to specific financial products is kind of acting as an alternative that makes life easier for customers, right? And you can look at this from various angles. I mean, we've covered a few earlier, one of which was lending, the other is remittances, and the ability to kind of send and receive money seamlessly. The third of it would actually be eliminating the need for infrastructure, which I think is so critical for small business owners and merchants operating around Africa. People that, for instance, are unable to accept card payments or digital payments because they haven't got a point of sale system at their kiosks from their customers, or they don't have an online presence. I think the ability that DeFi and stablecoins has to then be able to give them a channel to receive funds faster without obviously having to give up a massive chunk of their funds to larger payment processors like Visa and MasterCard is a massive market in itself. I came across a really fascinating scenario earlier where I was in Kenya and I visited a jewelry shop, and they said to me, if you need to make a purchase, you have to either pay in cash or we're going to apply the merchant fee, so the 2.5% fee that they as a merchant would need to pay to Visa or MasterCard to your bill.
Wow.
And I was like, why should I be responsible to pay for this merchant fee? It's obviously your
Mm.
fees. And they're like, no, this is our business practice. Start to incur that fee, the transaction is no longer going to be able to be profitable for us. When it comes to splitting up that per ticket profit between the crafters and the people that actually have been responsible for building that piece of jewelry. And I was so insistent on this, and I said, look, I don't want to pay this fee. And he said, look, the ATM is right there, go withdraw cash. So I think just the obvious way to learn about this is realizing that being able to pay with stable coins or DeFi would eliminate the need for this kind of battle almost between the customer and the merchant about who's going to incur these fees.
I think that's a very interesting story there, Maimoona. And I think we have similar issues too in Nigeria, for example, even before the cash crunch that we're presently experiencing right now. People will they will always refer you to go. The ATM is right there. I mean, go withdraw the cash, pay me. And I don't even trust the transfer.
I think the most important thing that regulators need to prioritize is speed of getting to market and truly appreciating the founder's perspective, right? I mean, having been someone who's practiced law, helping companies actually break into markets, working around regulation, the go-to approach that we would always advise people earlier was try to actually have a conversation with your regulator about, is this or is this not a regulated product? And kind of work into the depths of the framework that's been offered. I think from a regulator's perspective, creating a time box sandbox, for instance, where you're onboarding a cohort of companies and, in some sort of an expedited framework, helping yourselves understand whether what they're doing requires a certain level of licensing or a certain level of policy to be implemented, or if they can just be permissioned and allowed to kind of get to market as soon as possible. That would be an incredibly interesting, I guess, way that regulators can support the ecosystem, because I've over the years come across so many founders who have essentially, their startups have fallen apart because of lack of regulatory clarity about whether or not they're meant to be regulated, and spending all of this time dealing with regulators trying to understand the answer to that question.
With a friend, and part of the issues mentioned are also risk. The people, are not really sure how this work, and of course, there is some risk associated with using some of these platforms, these DeFi platforms, and stablecoins. So, is there ways you think users can protect themselves from some of those risks?
I think being able to have a certain degree of fluency around understanding the basics of all of it is something you should really work on in terms of education. And what I find really interesting is there's so many programs these days that are both educating customers on, kind of entering Web3, but also developers, because obviously developers are building infrastructure that is likely to get subject to attacks and security issues. So I think it's so important for them to be aware as well. Obviously, as a customer, there's like basic etiquettes you need to follow, like don't share your seed phrase with other people, and make sure that you're kind of diversifying whatever you hold, and not storing it all in one wallet. I think just the flexibility or the agility that you have with DeFi, where you don't need to have all of your transactions operating through a single wallet, makes it a lot easier. And then, of course, more importantly, making sure that you're checking like who you're trading with, whether the company is credible or not. A hilarious incident that happened to me the other day was I took an Uber, and the Uber driver asked me what I do, and I sort of gave him some background, and we discussed that I was a lawyer, and he said, "Can I ask you for some legal advice?" And I said, "What happened?" And he said, "I was working with, or I took a course from this guy on investing in blockchain, and it turns out he's running a scam, and I've
Hmm.
lost £6,000. And he had onboarded some 3,000 customers. And so all of us collectively have now received an email from the FCA, which is the Financial Conduct Authority, or the principal regulator in the UK, saying that we're only going to be able to recover 10% of what we've lost." So is there a way I can dispute that? Is there a way I can challenge that? And obviously my ride from where I was picked up to the destination was 11 minutes. So I'm now kind of having to give him a breakdown as to everything that he should be thinking
About.
exactly. And I'm like, look,
uh,
this is the first thing you're going to do. This is the second thing you're going to do. Try to have a conversation with the FCA, explain your background. But I think the bottom line is, just make sure that you are kind of running your due diligence on, working with the right platform, and making sure that, they're actually kind of credible enough to do what they're doing. Of course, it's hard to differentiate. I mean, even with FTX, like no one knew what would have happened. And, I think there are still customers who have been unable to recover their funds. But I think as a customer, there's the whole kind of know your risk component, and you just have to kind of do whatever you can to kind of make sure you've at least tried to get yourself comfortable.
well, interesting. So we've talked about what the regulators can do, the customers can do. So let's talk about these decentralized exchanges as well. So what do you think can be their role, for example, in promoting DeFi adoption and educating people about how even safe their platform is, compared to some of the news or problem people have faced in losing their money out there?
Yeah, I mean, I think the biggest advantage that decentralized exchanges have, and what they can really do to kind of win customers over, is help them understand why they're different from a centralized exchange, and the fact that, if something goes wrong with a centralized exchange, your money is not your money anymore. It's entirely in their custody, and the path to recovering that is nearly impossible. Whereas with a decentralized exchange, you're a lot more in control. So I think from an adoption perspective, there's definitely potential for customers in Africa to be able to kind of work with a decentralized exchange, and be able to trade cryptocurrencies or buy and sell in a much more kind of agile manner. And that could enable, I mean, there's obviously multiple parts you can consider for this, but let's say a decentralized exchange is just is focused on helping gamers essentially access liquidity, right? And their intention is, okay, we'll give you a quick way to kind of buy and sell currencies in our platform so that you are always funded whilst you're gaming. I mean, gaming is a massive kind of area for the African continent, and I think we're one amongst the, I guess, top 10 in the world in terms of like blockchain gaming adoption. So there's different ways that I think decentralized exchanges can win customers over, but I think the prime advantage is just the greater control that customers have over the process, instead of making them feel like they're in control where in reality they're not.
Well, I mean, I think that's a great way to actually, think about it. So what are some of the promising DeFi project or stablecoin project that are focused on Africa and maybe other emerging markets that you would like to talk about?
Yeah, I mean, I quite like, and some of these are, I guess, fairly old, but they've been around in the market for quite some time now. I quite like Egoras. They're a Nigerian startup that's providing microcredit to small businesses using DeFi. So I think that's a really interesting one that is, essentially has a lot of potential in sort of solving some of the issues that we just discussed around merchants and how they're struggling with kind of dealing with payment processes and liquidity issues overall. So I think they're an exceptional one. I think there's slightly different, not necessarily gaming in the DeFi space, but there's a startup called ScoreFam that I came across quite recently. They're building a sports betting platform for the African continent. And I think, again, that's quite interesting because they're looking to kind of enable betting in a permissionless manner. And obviously, that's a massive industry globally. And to see active participation from consumers in Africa in that space, whether they have a genuine means to kind of be able to earn through participating in various challenges and quests. I mean, MPL, for instance, in India has developed a massive success story off the back of it. So I'm excited to see something of that scale happening in the African continent as well.
Absolutely. So looking to the future, what do you see as the biggest opportunities for DeFi, stablecoins?
For me, I'm huge on infrastructure. And I know there's an ongoing debate about whether we have too much infrastructure in the space and not as many customers. But I do think that seamless DeFi infrastructure is a problem that needs to be solved in a hyperlocal manner for the African market, right? Whether it's, for instance, providing a wallet that supports multiple chains, whether it's providing, maybe identity and fraud management infrastructure to make sure that even the customers that are being onboarded are legitimate. All of this, I think, forms various key working parts of DeFi that will then enable, 100 or 1,000 new DeFi companies to be built. So I think at this stage, prioritizing infrastructure for me is a massive opportunity that I think is worth pursuing. The other one, of course, and this is, continues to be untapped, is lending. Thinking about alternative scoring mechanisms, alternative ways to underwrite risk, but also enabling lending in more permissionless ways. For instance, a peer-to-protocol mechanism would be very, very exciting to see, particularly in a market like Africa, where the bulk majority of customers need access to credit but are unable to kind of meet the traditional requirements that banks have.
Absolutely. I think that's really interesting, and the opportunity is massive. I can imagine what startups will build into the future, leveraging this amazing technology. I mean, thank you, Maimoona, for sharing that. So I mean, before we go, if you can just tell us about some of your investment work, about 3x. Can you tell us maybe some of your investment criteria? I know some startups are probably listening that are building projects around Web3 and maybe fintech. So can you just tell us maybe some of the kind of businesses that you look for, and maybe if there is a way they can reach out to you, and that would be great to hear that from you.
Yeah, sure, absolutely. So I sort of invest in two ways with the funds that I work with, which are 3X, Hexagon, and Grey Horse. We focus on early stage investments, pre-seed and seed, building in both Web3 and fintech, anywhere across Africa. So there's no kind of geographical constraint. You could also be a company that's located outside of the continent but building for it, and that's something we'd be happy to consider. Predominantly we're in the post-product stage, so you'd need to have at least a working product. Revenue isn't necessarily a determining factor for us, so you could be pre-revenue, you could be post-revenue. What we do look at is the ability to get to market really quickly, and essentially the domain expertise that you need to have around being able to appreciate the local challenges of building in Africa. I'm sure you've experienced this as well, but it's very common for a lot of people to expect founders building in one part of Africa to just deploy that playbook seamlessly across different markets. So if you have something running in Nigeria, they're like, yeah, of course you can take this to Egypt or Kenya. And the reality is, no, you can't, because the landscape there looks different, or there's 500 new things you need to do to kind of expand to those markets. So I think having to kind of work with founders who have an appreciation for those, finer kind of local channels, what we deeply look at. And I mean, the deal, for instance, is undisclosed at the moment, but I recently invested into a Tanzanian earned wage access platform. And one of the things that really got us excited, so they had a working product in place, they'd signed a few partnerships, started onboarding employees to advanced salaries. But what really kind of impressed us above anything was their understanding of the Tanzanian market and how things work, and I guess the innovative ways in which they're testing the product right now, but also how they're looking to scale it moving forward. But on the second track, one thing I'd love to kind of mention is the work that we do with Africa 3. So I'm now sort of building an angel investment syndicate through Africa 3, which is sort of, again, a channel for founders to be able to tap into broader market access. We predominantly focus on sort of smaller checks of between 10 to 25,000, very, very early stage startups for that matter. So I think all of the criteria is that I previously mentioned around revenue and finding product market fit may not even be something we consider it with Africa 3. So it could just be your, a solo founder with an exceptional idea and a deck, and that should be good enough kind of want to work with you and consider the investment. So we also focus on Web3 there with Africa 3, but it's both Web3 and AI. So if you are building outside of Web3 as well, we'd love to have a conversation and learn more about what you're building.
Absolutely. That's really amazing. So is there any other thing you'd like to share with us as we round up?
No, I'm really excited to kind of hear from more builders and look forward to kind of seeing the evolution of DeFi and the broader kind of Web3 ecosystem in Africa.
Absolutely. It's really been an amazing conversation. Thank you, Maimoona, Mohammed, for being on the Curious K podcast. Thanks
for having me. Cheers.
Yeah, thank you. Thank you, everyone, for listening. We believe you enjoyed this episode. See you next time. Bye-bye.